Sending its stock falling. This was an unexpected twist. Could Musk's controversial statements and actions be dragging Tesla down? Let's rewind a bit and see what went down with Tesla last quarter. So, Tesla hit a bump. Yep, they saw their first annual sales drop since the pandemic hit. And guess what? It was worse than people thought it'd be. Now, why did this happen? Well, Tesla pointed fingers at a few things: a sluggish economy in China, a fire at their factory in Germany, and issues getting parts due to tensions in the Middle East. Tough break, right? But it's not just outside stuff causing trouble for Tesla. Some of it was kind of inevitable. You see, new competitors stepped into the electric car scene ready to steal some spotlight from Tesla. And guess what? They did just that. See, Tesla kind of left the door wide open. They didn't bring out new stuff fast enough to keep customers interested. Plus, Elon Musk, well, let's just say he's not everyone's cup of tea these days. Now let's zoom out a bit. Electric cars as a whole were hitting a speed bump in the United States. Sales were flattening out, not growing like they used to. According to the smart people at Cox Automotive, the last 2 quarters didn't see much of an increase in electric car sales at all. But let's dig a little bit deeper. What might look like a general drop in interest in electric vehicles is really more about less interest in Tesla. Other car makers like Audi, BMW, Mercedes, and Rivian have actually seen their electric vehicle sales grow by more than 50% over the past year. Stephanie Valdez-Streety, an analyst with Cox Automotive, pointed this out in a presentation on industry trends for the new year. Ford even said their electric vehicle sales jumped by 86%. Valdez-Streety put it plainly, looking at the data, the big slowdown in electric vehicles is really a Tesla slowdown. So what's Tesla's deal? It's not a bunch of problems, it's one big problem. And no, it's not Elon Musk. In fact, he's part of the solution. Tesla's been hit with a lot of bad news recently. This has made its stock drop by more than 11% in April and a whopping 37% this year. At first glance, demand for Tesla seemed okay. In 2023, they sold 654,888 vehicles in the US, grabbing more than 50% of the market. Pretty impressive, right? But the growth was a letdown. Tesla's US sales grew by 25% year over year, which was about 20 percentage points lower than the overall US market. Globally, Tesla's sales volume grew by around 38%, missing their long-term goal of 50% average annual growth. The first quarter was even rougher. Tesla delivered around 387,000 vehicles, which was down almost 9% from the previous year, and missed Wall Street's lowest estimates by around 20,000 units. They fell short of global market growth by roughly 20 percentage points, mirroring their 2023 US performance. To boost demand, Tesla offered US buyers incentives in March that added up to almost 12% of the average transaction price, nearly double the industry rate. When you look at all these numbers, it boils down to one big issue: it's getting harder to sell Tesla cars. Elon Musk had a different take on the situation. This was a tough quarter for everyone, he tweeted on April 2nd. After Tesla's disappointing first quarter, delivery numbers came out. Tesla pointed to production problems in the United States and Europe, as well as logistical challenges in the Red Sea, but according to JP Morgan analyst Ryan Brinkman, supply problems weren't the real issue. The real clue was Tesla's decision to lay off about 14,000 workers. This move highlighted that first quarter delivery shortfall was due to a demand problem. Tesla's scenario isn't unheard of in the auto industry. Other car makers have faced similar obstacles. Mike Ward, an analyst with Freedom Capital Markets, whose decades of experience covering the car industry, sees a resemblance to what General Motors went through in the 1980s and 1990s. Back then, GM's financial success masked underlying market share issues. Ward notes that while the Tesla brand's powerful, it undoubtedly faces some real challenges. As he puts it, Tesla's chasing the ball down the hill, indicating that they're trying to catch up in the middle of growing difficulties. Alright, let's break down what Wall Street's saying about Tesla's game plan. They've got a pretty clear idea of what needs to happen. Tesla's got to shake things up with some fresh rides, and top of the list, a new, more affordable electric car named the Model 2. Now, this Model 2 is a big deal. See, most cars out there are way pricier than what many people can afford. Only a handful of models on the market come in at around the $25,000 mark. Tesla's aiming to change that with the Model 2, making electric cars more accessible to people. But the Model 2 isn't hitting the streets anytime soon. We're looking at 2025 before it rolls out. That's a bit of a wait. Why is this such a big deal? Well, let's look at the numbers. In the United States, there are loads of car options, but not many that fit into that affordable category. Tesla's already got the Model 3, but it starts at a higher price point, around $39,000. So if Tesla can pull off this more affordable ride, they've got a shot at leading the charge and making electric cars more budget friendly. Now, not everyone's feeling so optimistic. Take Deutsche Bank analyst Emmanuel Rosner, for example. He recently lowered his rating on Tesla stock and slashed his price target. Why? Well, he's not too sure about this whole Model 2 situation. He's worried that it might not hit the roads until after 2025, and that's not sitting well with him or on other market watchers. Let's look into what the experts are saying about Tesla's future, shall we? According to Canaccord analyst George Giancrious, the Model 2 is a game changer. He reckons it's the key to revving up Tesla's growth engine once more. Now, here's where things get interesting. Back in April, there was a report floating around from Reuters claiming that Tesla was scrapping the Model 2 project in favour of focusing on self-driving robotaxis. But Musk quickly shot that down, saying it wasn't true. In fact, he even teased that Tesla would be unveiling its own robotaxi on August the 8th. Now, some people like Gianrikas think a robotaxi could be a neat idea. He's all for self-driving cars and figures Tesla could do both, make the Model 2 and the dive into the robotaxi game. But here's the thing, Tesla's got an earnings report coming up on April 23rd, and you bet analysts are eager to hear what Musk has to say. They're itching for some answers on Tesla's plans. Wedbush analyst Dan Ives sums it up pretty well, saying the street wants the plan on cost-cutting future strategies, what's coming down the product pipeline, and Musk's overall vision for the company. But let's talk about Elon Musk for a moment. See, there's a feeling amongst investors that when Musk is fully focused and engaged, he's the one who can really steer Tesla in the right direction. But lately, some folks have been noticing that he seems a bit, well, distracted. Running multiple companies like X and his AI startup XAI can do that to a person. Dan Ives put it plainly, investors want Musk to be the adult in the room. They need someone who's got their eyes on the prize and isn't getting sidetracked. It's not the first time investors have felt this way either. George Gianrikas echoes the sentiment, saying people are craving some positivity from Musk, a glimmer of hope for what's to come. And hey, when investors start feeling shaky, you know what happens, stocks take a hit. Tesla's stock dropped around 3.6% recently, landing at $149. Meanwhile, the broader market, represented by the S&P 500 and Nasdaq Composite, saw smaller dips. It marked the fifth consecutive decline for Tesla's stock, painting a picture of uncertainty in the eyes of investors. In recent years, Musk has made some controversial statements and aligned himself with divisive views like racist remarks and agreeing with anti-Semitic statements. Not only that, but Tesla made a notable move by removing support for diversity and inclusion from its financial report. It suggests that Tesla's reputation and customer interest in its vehicle have been taking a hit since around the beginning of 2022, coinciding with Musk's increased involvement with Twitter. Soren Holm from Caliber points out that Musk's public image is closely intertwined with Tesla's. Despite being hailed as a visionary and one of the richest people alive, Musk's controversial statements have cast a shadow over both himself and Tesla. Trust and likability scores for both Musk and Tesla have taken a nosedive in Caliber's analyses. And it's not just about perception, it's impacting the bottom line. As competing electric car models hit the market, Tesla's baggage, courtesy of Musk's actions, could discourage potential buyers. Holm emphasizes that the reputation as CEO stamps on a company's brand carries significant weight. With Musk's reputation increasingly becoming that of a loose cannon, it's a factor investors and consumers are taking seriously when considering Tesla's future. If you found this video insightful, don't forget to hit the like button, subscribe to our channel for more updates, and drop a comment below with your thoughts. Until next time.